wanted to talk about capital gains tax. If you're thinking about selling your business, this is one of the budget announcements that I would be watching very carefully, because capital gains tax is one of those taxes where the Chancellor can change the rate from the budget date itself. And we've seen this happen before. In October 2024, the Chancellor increased the main rates of capital gains tax from 10 and 20% to 18 and 24%. And those new rates apply to disposals made on or after that budget date, the 30th of October 2024. There wasn't a 6-month window afterwards where you could simply rush a sale through under the old rates. Now, this is really important if you're currently considering selling a company or business assets. Now, for many business owners, there is another term you'll hear when we talk about selling a business, and that's business asset disposal relief, BADR, or you might even remember it from the old name, entrepreneurs relief. Now, this applies when you sell a qualifying business, part of a business, or shares in your business, your personal trading company. If you qualify, it reduces your capital gains tax rate on those qualifying gains. It's currently 18% for disposals after the 6th of April 2026 and applies up to £1 million of qualifying gains over your lifetime. So if you sold qualifying shares and made a 500k gain, BADR could potentially mean that gain is taxed at 18% instead of the normal CGT rate. But you don't automatically get it just because you own a limited company. There are, of course, conditions. For a typical shareholder selling their trading company, we're normally looking at things including whether you've had your shares for the required period of time, the company is a trading company, or it's a holding company of a trading group, you're an employee or an officer of the company, and you meet the required ownership and voting conditions. So this is something we can check and should be checked well before a sale. And there is another really important lesson from previous governments, from previous budgets even. Governments now, people are going to try and lock in that lower tax rate, so they try and sign something. Now, these are called anti-stalling rules, and they can be introduced. And this means that just by signing something doesn't necessarily guarantee that those old rates are going to apply. So my advice before the 28th of October is not to sell your business before the budget. It is if you're selling your business and it's, commercially on the table, make sure you understand your current tax position now. What's your estimated gain? Do you qualify for business asset disposal relief? And how much of your £1 million lifetime allowance have you already used? Does your company still qualify as a trading company? Think about other investments, excess cash, or perhaps non-trading activities that we need to think about. And what would the tax look like? And what would it look like if it changed? Because there is a massive difference between being prepared for a budget announcement and letting a budget rumour dictate whether you sell your business. So if an exit is even remotely on your 5-year plan, start reviewing your BADR eligibility now. Do not wait until you've agreed the sale price. The conditions need to be met before the disposal. And sometimes the problems can be fixed if we spot them early enough. So capital gains tax could change. It could even change from budget day itself. Business asset disposable relief can be extremely valuable, but preparation beats panic every single time. So have a look. If you are looking at commercially selling now, you may want to make sure that that's over the line before the 28th of October to seal in the current rates. But I wish I had a crystal ball to tell you what the rates may be in the future.